Ladies and gentlemen, good morning. Welcome to HansaMatrix Investor Conference webinar about financial results and company's activities in the third quarter of 2018. Today, we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO Māris Macijevskis. Before I give the floor to the gentlemen, let me shortly remind you about the agenda of the webinar. Firstly, we will have company's presentation, after which we will proceed with the questions and answers session. We have already received some questions from investors, and if you have something to ask to the company yourself, please don't hesitate and type your question in the questions box on the right side of the screen. Ilmār, Māri, I invite you to start the presentation.
Good morning, everyone who joined our webinar and our streaming conference. We are HansaMatrix representing Q3 and 9-month results. In addition to that, we are having explanation of right now events, important happenings, and some future plans as well. So we are proceeding now with the presentation. We'll start with the executive summary. Let me summarize the main things through the presentation. So quick summary that during first 9 months, 2018 company reported sales volume increased by 11% compared for the same period of 2017. Market trends. HansaMatrix is observing growing market demand for high quality supply chain in USA, especially after recently introduced China import tariffs for China. We have received first orders from 2 new US customers. One is from Los Angeles, California, other is Boulder, Colorado. In parallel to that, there is currently global electronics component shortages on the market, some deficit of some specific parts that are used very widely in industry. And that adds additional challenge for HansaMatrix Group to ensure on-time deliveries for the clients and to effectively manage inventory levels. Brief summary of the results here in table. Q3 quarterly turnover is reported slightly above 5 million euros. 9 months turnover amounts to 16.1 million euro, and Q3 TTM or 12-month period turnover amounts to 21.2 million euros. So we are confidently have exceeded 20 million as was forecasted for this year. Year-to-year increase, 9-month result is 11%. Q3 results is decreased from last year Q3 by 4%. In a quarter, EBITDA margin is 31% lower as year before. As you maybe remember, we had a extremely good Q3 last year. So table summarizes our results here. On a 12-month basis, our EBITDA profit margin stands at 17%. Net profit margin stands of 6.6%, and price earnings is 9.1 currently. Comparison with peers. Again, every quarter we are kind of comparing our performance with the industry in general and listed companies acting in our segment. We're demonstrating from quarter to quarter highest among industry peers results, and of course we always state that this is because of the management strategy focus or high added value product manufacturing capability provide the research and development resources to customers. So basically we stand at the top of the list where EBITDA margin is 17.04, and at the bottom of the list we are having a company which demonstrates 5.16 EBITDA margin. So net profit margin is actually accordingly shown here. And peer market value ranges are 3.7 up to 10 multiples of EBITDA. Currently HansaMatrix share price is pretty low. Where market cap actually gives you 3.5 multiple, which is, I would say, a very good point for some new investors to come in. Q3 results and a few more details. I give microphone to Māris. Māris will continue with detailed report on the results. Māris, please.
Yes, hello everyone. Thank you, Ilmārs. So detailed quarterly financial results. In third quarter of this year, the company sales amounted to 5 million, which is a slight 4% decrease as compared to the third quarter of 2017, and also a 4% decrease as compared to second quarter of this year, previous quarter. Then if we look at the sales split by the region, three main regions to which we provide manufacturing services are Baltic states with 42% of total, Nordic countries 31%, and other EU countries 27% of total. And services provided to companies outside the EU are below 1%. And this quarter, sales to Baltic clients and other EU countries clients decreased, but the growth was observed in Nordic sales, both as compared to Q3 of 2017 and to the previous quarter of this year, Q2. And then sales by market segment. Two main segments are data network products with 46% and industrials with 39% of total, which both are well-established industries. Internet of Things and other segments are comparably smaller than these two, respectively 6 and 9% of total. And in third quarter of this year, data network segment, IoT and other segment decreased on year-on-year basis, but industrial segment performed well and increased both on year-on-year basis and also as compared to the previous quarter of this year, Q2. Then profitability results. This quarter EBITDA was almost 800,000 euros, which is 31% down on a year-on-year basis and 20% down from second quarter of 2018. Net profit achieved this quarter amounts to 153,000, also both down on year-on-year basis and also if compared to the second quarter of 2018. This quarter margins were impacted by the product mix, where the proportion of products manufactured with higher added value decreased, but still EBITDA margin of 15.5% is at a healthy level. And then 9 months results of 2018. Then if we look at the 9 months results, then the quarterly fluctuations are smoothed out, and for all 3 9-month periods that can be seen in the figure, the turnover growth is observed. And in this quarter, Q3 of 2018, 16 million turnover was achieved, which was 11% year-on-year turnover growth. So the 9 months sales split by the regions, Baltic 43%, Nordic countries 28%, the rest of EU also 28%, with most of the regions growing both on year-on-year basis and compared to with most of the regions growing on a year-on-year basis, except the outside EU region. So market segment in 9 months. So the market segment split is 52% data network products, 36% in industrial segment, 5% IoT, and other 8%. And here also most of the segments are growing on year-on-year basis, except for the other segment. Then 9 months profitability result. The EBITDA achieved in 9 months was 2.8 million, which is a slight 2% decrease compared to the last year 9 months period. And net profit result was 1 million, which is 11% down on year-on-year basis. And the margins were still at quite healthy levels, 17.4 EBITDA and 6.6 net profit. Then next 12 months trailing results. For the 12 months trailing results, the company achieved 21.2 million euro turnover in a 12 months period, which is up 9% if we compare to the period which ended in the third quarter of 2017. EBITDA and net profit in the last 12 months respectively amount to 3.6 million and 1.4 million euro, which also both have grown if we compare to the TTM sales result of the period which ends in the third quarter of 2017. And margins are also quite good. On a 12 months basis, 17% and 6.6%. As Ilmārs already mentioned, highest among the selected industry peers. And now I give the floor back to Ilmārs.
Okay, thank you, Māris. I just wanted to correct on one slide on 9 month results. Actually, comparison is done on 9 month basis, but in a textual comments you can see there's some mistakes. There is stated the comparison is done to 6 month results. So yeah, please read this as 9 months. Update on other activities. A few words about R&D turnover. We as a group, we are continuing to increase our R&D activity, R&D kind of spending and earning. 2018 Q3 R&D B2B sales reported 0.33 million, which is slightly higher than previous periods. You can see from the chart. It currently stands for 6.5% share of quarterly consolidated sales. And if you take 12 months, then it's 1.2 million, which is a good figure. However, I have to say that we are aiming to get it 10% and higher share from the turnover. Again, stressing that there is no any grant financing, R&D grant financing is not included in those figures. Investments during 2018 9 months. We had quite aggressive investment plan for this year and year ahead. During 9 months of this year, HansaMatrix made 1.46 million investments in production capacity increase, research instruments, test systems, of which 668,000 were invested in Q3 2018. During the same period, a group received financing was done, leasing financing, close to 900,000 euros, and using SEB leasings, of which 500,000 were received in Q3. So it funds, as you can see, it funds quite a large share, but you can still see there is quite large share funded by company itself. Most significant investments in Q3 relates to increase and effectiveness were made automated through-hole assembling robot to increase printed circuit board through assembly efficiency in Ventspils production facility. Before this was fully manual operation. Now we are starting to use some robotic and automation there. And another investment was done in Mārupe precision metal production unit. We invested high-speed machining system, which allows us to start to manufacture of composite material soldering pellets that been quite hard. There was some deficit in Baltic markets, and we experienced constantly supply chain problems with too long lead times. So we believe we also can sell this service to some nearby other companies doing manufacturing. Investments in associated companies. During the same reported period, HansaMatrix made 826,000 euro investments in company LightSpace Technologies to finance the product development and commercialization of 3D display technologies, out of which 323,000 were invested in Q3. During 9 months period, also made 291,000 euro investment in form of convertible loan to associated companies in other sparks, 110,000 out of which comes to Q3. As of June 2018, that's not supposed to be September. Stands totally 1.134 thousand euros. Okay, what's going on in our associated companies? LightSpace Technology, during the reporting period, LightSpace have started a very challenging feasibility study with leading car manufacturer of development of car multiplying 3D augmented reality head-up display. So basically, this is one of the areas where we do have global advantage. Our technology is one of the few that can be used in such kind of 3D visualization displays. During 9 months of this year, LightSpace has filed 5 new patent applications and published 2 scientific articles. There has been a lot of marketing activities. If you follow our marketing announcements, that we are trying to publish announcement about everyone, but among most noticeable ones, that's Photonics West 2018 San Francisco, Defense Commercial Sensing show in Orlando 2018, and all those are in US. Then we participated in London Medical Imaging Show convention and 2 conferences in Rome and Alexandria of so-called ISR, intelligence surveillance and reconnaissance technology demonstrations. High-tech city. As this has been project already for a while, we've been talking about this. Our project development work is coming to the end. It's almost finished. We are currently looking for real estate investors, and here we have good news that finally Ministry of Economics launched the support program for industrial buildings and industrial parks that we were waiting for, and we will apply for this support. Other events during reporting period. In July, in mid of summer, HansaMatrix increased existing order facility with SEB Bank by 400,000 euros, out of which by 400 from 6 to 10,000 or to 1,000. Well, 1 million euros at SEB Bank, and signed unsecured supply chain factoring agreement with SEB Leasings in amount of 300,000 euros. On July 20, Baltic Latvia Venture Capital Fund acquired 9.95% of HansaMatrix shares from Macro Riga, which decreased company share ownership to 49.09%. And on the same event, Macro Riga acquired 11.68 LightSpace Technology shares from Baltic Latvia Venture Capital Fund. This transaction already been described in previous webinars, so we would not go in more detail in this. Another event happened on August 20, 2018. A fire broke out in one of the HansaMatrix clients' warehouses, and which was expected that it will have some negative impact on turnover on Q3, Q4. You probably can see some impact on Q3 already here. And this is probably impact which would be impacting turnover only for like maybe 3-4 months, and it's not expect impact in longer term. Significant events after reporting period. On October 29, HansaMatrix have received purchase order. Of course, we have signed contracts and went through long approval process and calculation, price calculation process and price negotiations that took almost a year. But we have signed agreement with the supplier high complexity electronic assemblies and amount of $3 million for years 2019 to 20 to industry segment corporate customer with location outside the EU. A customer name according to a contract remains confidential. So this is a single largest purchase order received by HansaMatrix in its history. Of course, this is new customer, so it adds on the existing portfolio. Another interesting happening, and I would especially stress this is not just important, it's actually European Investment Bank official approval of 10 million euro long-term consecutive financing facility in support of HansaMatrix Group's planned investments. Investment plan was made to support 10 million. Approval was 20 million euro for the 3-year period. The meaning of this event is I cannot overestimate its first and only project currently in Latvia where European Investment Bank funds anything and funds a business. So this puts a very big quality sign attached to the company HansaMatrix. Of course, being listed helps to have this happening. Of course, a lot of checks, a lot of routine due diligence was done to approve this facility. So I'm pretty proud that this is finally happening. It took like close to 1 year to go through the process. So, and that was management was doing the last 12 months. So on November 15, HansaMatrix paid out, second installment of the 2017 profit dividend payment in amount of 73,000 euros or €4 cents per share. For you who been shareholders at the point probably received your share of this dividend. A little bit more detailed description of this European Investment Bank financing facility. The name of it is quasi-effective funding, which doesn't tell much with that words, but it consists of several different tranches of amounts of the funds. One of the fund amount, like tranche 1, is 5 million euro loan, which is available as a 5-year bullet. It's kind of very similar to what it could be like 5-year bond. Like for the supporting company, it actually has only one-off interest payment at the end of 5-year period, and the amount of interest is 10-year share market value at the time of the payment. So 5 years, no cash out. So it's kind of quite equivalent of investment of 5 million euros into the company. In order to secure this has been requested, and we believe this is also quite good for company. It's been received 10% share warrant as a security, but the agreement says that first thing EIB has is put option of warrant. So warrant is secured. There is on option to convert warrant to the company shares, fully diluted shares at the end of 5-year period. But rather than that, it doesn't dilute anyone for 5 years. Tranches 2 and 3 of EIB facility are standard non-amortizing investment loans, bullet loans, available after and if the company reaches certain financial milestones during next 3 years or next 2 years. A European Investment Bank financing facility is unsecured. Of course, there are some covenants which covers that. It has to be complemented with HansaMatrix own capital, commercial bank lending, and EU fund can be also used combination EU fund grants. Yeah, and we had received one of questions already before the presentation, and of course everyone wonders what we are going to do with the money. Why do we need it actually? So we are publishing here very brief investment plan. So actually, this is nothing new. This has already partially been communicated to investors and at the time of going public. But going to the detail that we are planning to use this money to upgrade manufacturing process at the Ogre plant. 500,000 would go there. That would improve quality, product quality, would reduce downtime and maintenance costs of some older equipments. We are planning very substantial investment in new capacity, new technological processes in Ventspils plant, 3.55 million, where 1.75 goes to new plastic parts production unit, which will increase value, quality of products, and which will increase added value, quality of products. So we are doing vertical integration here exercise, and we'll add new customers here. Also, we are planning to set up new prototype and NPI production line in Ventspils. 1.1 million will increase capacity for prototypes and new product actually runs. And also some equipment is considered to be invested to lift the production processes to IPC class 3 level and being able to certify for airspace production 700,000. New product R&D project funding in HansaMatrix Innovation. So prerequisite of having these funds, of course, was R&D. EIB doesn't fund just investment in assets, so R&D was prerequisite. So are you having R&D? Are you having activities? Yes, we do. We are planning fund 800,000 over this period to develop new IoT products that we have started work with some industry main players here. Generally, we've been starting this doing with Latvian mobile telephone. Also, we are continuing to develop our IT Industry 4.0 compliant manufacturing IT platform, and we will be working to start to use some machine learning algorithms there. That means if we are using words used in hype, then it's artificial intelligence elements. Some part of the investment goes to working capital increase, 1.25 million. Investments in LightSpace Technology and funding of 3D visualization system R&D was approved by European Investment Bank at level 4.85 million over this year period, which would allow LightSpace Technology to improve or to invest in a few key enabling technologies to 2.5 million in manufacturing process. And more detail looking, that's vacuum sputtering systems and 27-inch screen size production abilities. Also, 2.35 million is considered for R&D funding for the advanced 3D AR/VR product development. Value proposition to shareholders. HansaMatrix believes that structure investment financing facility is very beneficial to the investors based on the following: that company will be able to realize full investment program to accelerate growth in current business volumes and value. At a maturity in 5 years, company planning to repurchase the warrants issued to secure a loan to European Investment Bank at the market price at the time of repurchase to avoid the existing shareholder dilution. That's the plan A. If you compare this facility to new capital attraction, then in case we would need to attract 5 million financing, we would have to a new equity, then we have to dilute our existing shareholders by approximately 30% of the capital of company. So that would be much higher dilution, and we would use shareholder funds. So actually, this facility allows to company enjoy this investment for 5 years. I will not just enjoy, but put that into use. At the same time, at the end of 5-year period, this would add every shareholder from 2 to 5% additional value in the shares. Quality, that completes the presentation part, and we are coming to the question answer session. Eva, please.
Exactly. Thank you, gentlemen, for the presentation. A lot of going on in the company. Turning to the questions, as Ilmār, you already mentioned, we have received some questions in advance. Perhaps let's start with them, and then let's see what participants have to you today.
Yeah. Okay, I'll continue the answering questions. And we received 5 questions and before webinar, and try to explain and answer. We have put brief answers in writing into presentation, and I can maybe a little bit add in like verbal format. Deficit of components, is it only due to fire at your partner Americas or wider global issue? Generally, deficit of components is currently basically supply chain industry been cyclic in nature. In last 15 years, I have seen 3 to 4 cycles of some of components becoming deficit and recovering after that. Typically, such deficit phase lasts maybe for 1 year. Typically, during 1 year, supply chain companies are typically able to react on a market demand increase or change. So we experienced the company started to experience in April, May 2018. So I believe in April, May 2019, this will be over. At least historically, that's been 1 year typically to react on a market demand increase. So it's global. But as I say, it's touching only some components. That's not everything. It's just one type of components. But for all manufacturers, so basically all alternatives are on deficit right now. And reason for that is that if one product developer decides to use more of this kind of components in mass manufacturing, like in mobile phones, for example, that are manufactured in millions a month. So basically, this component very quickly can become obsolete because the phone manufacturers just buy all inventory and they book all a manufacturing schedule for next year easily. So, but of course, these are technologies that can be scaled up relatively fast. So I believe in 12 months time this will be over. What are the possibilities to price deficit other suppliers? There are possibilities, but of course, if the manufacturing base has limitations at this moment, then you have a deficit. As a result, you can find some material alternative suppliers, but at some occasions replacements are more expensive. Of course, it pulls up price. But on a higher price, you can buy everything. So of course, that in short term impacts our margins as well slightly, but not very substantially. Does it mean any fines for when the company cannot deliver final products due to COVID? Actually, delay in delaying we don't have any fines right now in the contracts, but of course it is nothing very good if we are pulling back our customer business. It's more like it's a little bit damaging to relationship, but of course everyone right now has the same situation. And in the figures, it comes out as slightly reduced turnover. Actually, that's what we are seeing right now. If number 4, HansaMatrix revenue is down now due to companies, would it be compensated by higher revenue following quarters in 2019? Generally, trend is growing and revenues are coming back, and we'll be catching up of some of that. I believe we will see improvements, and certainly we'll see improvements here to 2019. And of course, when on some occasions, of course, there will be higher volumes as well. Number 5, could you share some more information about investments which will be done for EIB loan? So this been already explained in one of slides. And we presenting planned investment item list for the first tranche of EIB financing in amount of 5 million. Other tranches are conditional. We will decide on them maybe a year later how we are going with that. So that completes our 5 submitted questions. I see that audience is submitting some more. Eva, please.
Yes, Ilmār, we have received some very good questions from investors. So let's start with the first one. Is the planned euro 4.85 million capex to LightSpace is going through HansaMatrix, and does it affect HansaMatrix ownership in LightSpace?
Yes, good question. Yes, it's this amount, of course, which to be invested in LightSpace. This is HansaMatrix investment there. 50% of that's funded by European Investment Bank. Other 50 will be funded by funds coming from like HansaMatrix own funds, including the funds of repayment of shareholder loan. This certainly would increase control in a company. Currently, we are considering this, at least for the period, next 12-month period, to consider this as convertible loan to the LightSpace Technologies. And because we are looking into some larger projects, and we might need on some occasions, we might need to form some partnerships with the large industrial players. So for that reason, we would like to keep this open, this kind of conversion to the shares. Yeah, please, I think I answered this one. Eva?
Thank you. Please explain exactly how the warrant put price is determined for the expected buyback of warrants.
Yeah, it's a buyback price. It's market value of, well, actually market value means market capitalization of the company. 10% of the total capitalization. That's the put price or buyback price.
I can maybe, Māris here, I can maybe add if the company objects to that price, then the independent evaluator could be attracted, which determines the price and which is final then. So that's the process in the agreement.
Thank you for explaining.
Generally, it's market price.
All right. What refrains the European Investment Bank to execute the warrant earlier during the 5-year period?
I would say general logic, because agreement is not to buy stake in a company. General logic for EIB is support company development. And in agreement, we have mentioned several. Of course, this is a kind of considered as a pledge. So bank, of course, primary would like to have the cash back, not the pledge. And I would say the general liquidity situation maybe on a Baltic stock market currently would not favor bank to convert this. So in generally, if there will be immediate buyer for this 10% at 5-year forward price, that there will be maybe interest, but generally the logic in agreement, nothing in agreement said that lending bank or EIB bank has rights to exchange at any time on the considerations. However, logic says it's either 5 years, and either this is any kind of, if a company breach agreement in some way, then they can do this. But generally, I do not expect that to happen. Logic says it's not logical. Yeah, thank you.
Thank you. And currently the last question in line. Do you expect your margin to come down further in coming quarters due to the component shortage?
Answer is no. We don't think this would happen. Another thing could just happening that we are right now having discussions with several companies to have new business with, and some of the projects has thinner margin than we are having currently in a portfolio. So this is already what we said. If the new business which will add volume to the turnover, an added volume to the turnover would be higher than added volume to EBITDA. So literally, relatively, EBITDA amount would absolutely grow, but the margins can become lower. But I do not expect EBITDA margins to reduce in absolute figures, rather opposite. If you can come a little bit back to this logic that I'm saying, that you have to realize that the European Investment Bank is not the one who wants to compete with commercial market, with investors. So there is no threat that they would like to challenge any shareholder. So the logic is adding answer to previous question. Logic is not to convert and not to exercise this option. General logic. Thank you.
Thank you. The warrant buyback conditions mean that the company would be interested in lowest possible market price of HansaMatrix shares at the time of the purchase. Do you agree?
Well, yeah, logic would say that, but from other hand, this is not encouragement for the company to not to develop. I think here logic says that, but from other hand, let's say we are not in a kind of kindergarten. We really want to do our business right anyway. So yeah, in a way, yes, they are in a success sharing business. But again, if you're doing well here and also if EIB is happy, then of course we have very good reputation as a business, I think, generally in Europe. And I think in 5 year time, so we'll be talking about maybe quite good story here. Yeah, but generally, as you asked, you are on a pointing right thing that, of course, for companies' interest to cap this somewhere. But from other hand, we have other. We might have different business size in 5 years' time, and it might not be so relevant. Yeah, thank you.
Thank you. We had some very good and interesting questions today. We have answered all of them. Unless any participant has anything else to ask, we are ready to wrap this up. As always, the recording of the webinar will be available in Nasdaq Baltic YouTube channel and also in company's announcement later today. Mr. Osmanis, Mr. Macijevskis, thank you for the presentation. Thank you for the answers given. And participants, before I'm ending this up, Ilmārs, we do have one final question.
Oh, perfect.
Can you just refrain from buyback?
Yeah.
Sorry. Can you just refrain from buyback and let them to execute the warrants?
It's possible. Well, no, we don't have like as option an agreement, but there could be agreement. We go there. That could be agreement. If in 5 years' time there will be seen as the good option, then it could be to attract new capital. That it can be sold on the market certainly. But I would say life will show what's the best option for company at that point. I think there could be options on a 5 year period, I think, but that would be probably agreement that we need to make an agreement with bank how to proceed with this kind of final procedures of the agreement. It's not directly written in the conditions of the agreement, but I believe as everywhere you can agree with your lender about certain things.
Thank you, gentlemen, for the frank answers. Participants, thank you for joining today. See you at the next webinar then.
Yeah, thank you for everyone who participated. Thank you for very, very encouraging and interesting questions. Bye. Have a good day, everyone.
Thank you. Bye.